Good morning, it's Harvey Jackson. Just going to get through some of the news here. Trump is seeking additional funding for farms. I believe it's $12 billion. And yeah, I don't know all the details of it. It's just the spending is there for sure. Um, some of it's going for some other disaster, but it's mostly for direct payments going to farms that are getting impacted by the Russia or no, the Israel Iran war. And Trump has also asked Congress to approve year-round E15 gasoline sales as well. Heat wave is killing hundreds of thousands of poultry in France, but it's also impacting the milk production there as well, the heat. So you're getting all kinds of issues there. People are dying as well. It's awfully hot. One comment I will make is, as we get closer and closer to the end of the growing season of let's say the winter planted crops, it's going to impact some yield, but it's at the end of the growing season here as well. Rates market seem reluctant to price in impact of lower oil prices. Just exactly as it says here, but the rates market is still waiting for signs of the markets cooling off before they're gonna start pricing in lower rates. Uh, uh, Netanyahu is actually in a little bit of hot water, not only from his own country, but of course, U.S. is kind of ignoring him now. He's not part of the talks, and that could create a lot of pressure there as some of the interim Iran deal is excluding him. Quick look at the weather here. So chances of, and this came from the ag weather site there, but you can see hot and dry. I don't know if that's going to mean that we're going to be hot and dry, but it's definitely going to be hot down in the corn, soybean belt growing region for sure. Your 2 week forecast or 1 week forecast, sorry, you can see that there's a fair bit of moisture landing in the prairies, and then this band here, this is actually going to create some flooding issues, and I'm sure we're going to have some flooding issues there too, because it's not just small amounts. Manitoba in the last 3 days definitely have been hit. You can see there's some moisture. I'm not going to say an awful lot, but it's enough. But some of this is, I would say, maybe wanted more up there. It's hard to say. Just a quick look at the next 2 weeks here. You can see when it comes in. It's basically just right around the July 1st date that a lot of that moisture is going to land. Just how and where the El Nino will actually impact crops. And you can notice that Canada is not really a big part of it, but definitely southern U.S., Brazil, China, India, all get impacted. Philippines, of course, and Australia. Like basically South America and southern part of the northern hemisphere as well. Canola is down another $4.10 at 7.40. Rapeseed is down as well. Soybean oil is down another 0.4 of a cent at 69 cents a pound. Crude oil, this is wrong here. It's actually below 70. Soybeans, they're up $2 2.75 at 11.11. Spring wheat is up a penny. Hard red winter is up a penny as well, and Chicago is just up a fraction of a penny. Milling wheat is down $1 in France, and your corn is down a penny as well. Canadian dollar is down again. Here, I just put a 30-minute chart just to get a little bit of different perspective, but we're trading right at the 61.8 retracement value, and that's kind of like a pivot point. Which direction is it going to go? And it's also up against on the daily chart. It's getting pressured downward from the short-term moving average. It gets to the short-term moving average, the 10-day, and then it just seems to be retracing. European rapeseed, soybean oil. This is the slide, and it's in lower values for sure. Soybean futures trading, in this lower area here as well. You could say that it's trading in some sort of channel going sideways here, just like the palm oil futures here as well. Crude oil at this 69 barrel, so it's starting to fill that gap. It hasn't completely filled the gap, but it's starting to fill that gap. Brent trading rate at 72. Diesel fuel trading at 314, and your gasoline is trading at 280-ish US gallon. The Canadian dollar keeps on breaking lower. This was my bottom end, and there's still some more room for it to go down. I said 70. The next layer here is 70.28, I think it is, and then it's got more space to go down. As long as there's pressure on this economy, it's pushing this market away from Canadian investment going to U.S. investment, and we know that. We can hear that on the news every day. But it's also making everything that we consume, buy in Canada, more and more expensive as the Canadian dollar falls apart. It's supporting canola price. It doesn't feel like it right now, but it's actually putting a lot of pressure on the rest of the economy. Fertilizer prices have come down, but the Canadian dollar racing and trying to beat it on the way down here, it's kind of insulating that price as well. US dollar index at 101, so it's way up there. Quick look at the wheat, breaking lower, and looks like we're going to retrace all the way back to some of those values for the Dees contract. Kansas hasn't made a new low here, going as far back as the Minneapolis wheat. Chicago looks like it's going to try to hold there too. We'll see if it can. Your European milling wheat and your corn futures. So you can see the direction of the U.S. corn futures, but look at the direction of the European corn futures. That heat just keeps on adding. But you also have the euro dollar actually falling apart as well. So that's supporting this on the way up.